Hello, good morning, good afternoon, everyone. Welcome. Thanks for joining us today for a new showcase from AFSIA. We're very pleased to have so many of you join us once again. We have a very exciting session today. It's time for me to already hand over to our two presenters of the day, Iranga Mukendi and Anya Babaikem. Thank you so much for joining us. Um, you will be co-presenting today, so that's very nice. And Iranga, I invite you to already share your presentation so we can get started. Over to you guys.
Yeah, thank you, Ranga. So I would extend my thanks again for everyone joining and for the Africa Solar Industry Association for putting this together. My name is Anya Babaikem. I'm an investment principal at Africa Infrastructure Investment Managers, AIIM for short. I'm not here alone. I'm here with my colleague, Iranga Mukendi, who is an investment manager also at AIIM. It's a pleasure for us to be here to showcase some of the excellent strides we at AIIM are making through some of our portfolio companies in deploying solar capacity across the continent, and specifically focusing on the excellent strides that we are making through the increasing ability for players like ourselves to wheel power, or wheel, in this more specific case, solar generation across grid infrastructure across the continent. But before we get into that, a short profile on who we are at AIIM for those who may not be familiar with us. So we are a Pan-African, AIIM is a Pan-African private equity firm focused on Africa's energy and infrastructure sectors. We've been on the continent since 2000, so that's going roughly 25 years of operations on the continent. We now have circa $3 billion of assets under management, and a team comprising of about 40 investment professionals located on the continent across 5 strategic offices in Lagos, in Abidjan, in Nairobi, and 2 in South Africa, 1 in Cape Town, and 1 is Johannesburg. So for us, Africa is our bread and butter, and where we see a very strong story for investing. Next slide, please, Randy. Investing in Africa's energy transition has been a bedrock theme for AIIM. We've been doing that over the last decade, where we have now deployed just shy of $1 billion, to be more specific. I believe it's around $987 million in equity investments into 33 renewable energy assets on the continent. Most of those assets have been or are in South Africa, where those assets are now responsible for about 25% of grid-connected renewable generation in the country. So quite significant achievements to date when we speak about nearly $1 billion of equity investments into renewable energy assets. And also on the environmental side, those assets are now having major impacts, with the assets generating around 5 terawatt hours of clean energy on an annual basis, as well as offsetting 5.5 million tons of CO2 emissions annually. So, of course, naturally, we are proud of these achievements and milestones to date. But when we look at it from the continental context, we recognize that a lot of work still needs to be done by ourselves and other players on the continent to address the massive market opportunity of meeting Africa's energy. And that's why we're particularly excited about the ongoing development and evolution of the ongoing evolution into the ability to wheel power, and the number of countries that are putting into place regulations for private players to be able to wheel solar generation and other renewable generations through grid infrastructure. We believe it's the right evolution for two key reasons I think everybody aligns with. One, it allows private players to now build projects to harness solar, in our case, or more prevalent to this presentation. It allows players to build generating plants in areas of highest solar irradiation and then transmit that power to major demand centers across the continent. That's the first benefit. And then the second, you look at the deployment of renewables in Africa. In terms of the global context, Africa is still responsible for less than 2% of globally deployed renewables. And that's because in majority of the time, or up till now, before the advent of the ability to wheel, we have been solely dependent on captive and behind-the-meter installations, which are obviously space constrained in those locations. So the ability to wheel power, as we are getting to see across the continent or beginning to develop across the continent, will have those two-pronged benefits of you being able to deploy plants in your best locations, as well as doing it at scale, so that Africa can continue to scale up its proportion of globally installed capacity. Now, the most advanced country in this, obviously, is South Africa, and the impacts of the evolution are already quite clear. So in 2021, when the Electricity Regulatory Act was amended to allow private players to do this, we saw a significant step up in projects being registered with NESA, who is the electricity, the energy regulator in South Africa. I believe the numbers were, in 2021, post the announcement, we saw registered projects immediately increase by about 50% from 8 gigawatts in a space of 12 months. So quite significant scale, sort of different in terms of the scale of project people are targeting, completely changing the magnitude through those regulatory amendments. So we believe this is the right way for Africa to go if we're going to be able to do things as quickly and at the scale that require to make a proper dent in putting renewables through our energy mix. But before we get, I will now hand over to Iranga to discuss a bit more on what we've done in South Africa and some of the major wins we already have through some of the projects we have deployed. Iranga?
Yeah, thank you, Baba. I have a couple of slides here just to take you through what we've done in recent years, specifically focusing on the CNI offtake markets, which, as you know, is one of the key benefiters of wheeling and a market which is actually driving a large part of the growth we are seeing in renewable energy adoption. On this slides, I'll just quickly highlight what we've done under Starsight. We invested in the company around 2017, and under these investments, we've deployed about 410 megawatts of solar energy. Of course, a portion of that is behind the meter. This company has since expanded into the South African markets through a merger performed recently, and we've seen exponential growth there, again, primarily driven by CNI wheeling opportunities. As you can see on this slide, I've highlighted the 1 gigawatt wheeled energy project that the company is currently developing for wheeling opportunities. As you can see there, like Baba mentioned previously, the size of these projects are getting larger and larger given the ability to wheel the power through the grid. Just quickly jumping to the second company I wanted to highlight, African Clean Energy Developments, in short ACED. This is an AIIM affiliate focusing on developments of renewable energy projects in South Africa. The company has successfully developed about 1.4 gigawatts of projects to date, and a lot more coming through the pipe. On the right side of the slide, I just wanted to give some colors on the kind of customers we've been contracting under this wheeling framework. Toward the end of 2022, we closed a 30 megawatt project of solar assets for a mining company as a client called Harmony. These projects are a combination of wheeling and behind the meter. The other two projects I wanted to highlight here, although not solar, I think still highlights the importance of wheeling to unlock the rollouts of renewable energy projects. So these two projects we closed in 2023. These are wheeled projects to, again, mining in the mining sector. An 89 megawatt wind project contracted to Sibanye, and a 69 megawatt project contracted to Sasol. I think, as you may have noticed, our focus on wheeled projects, which we've concluded under bilateral PPA model, where you have one project with one client as the off-taker. So, for example, here Sibanye will be the full off-taker of the wind being produced at the Castle wind farm. However, we've spent the past 2 to 3 years refining our wheeled strategy to include aggregator and trading as one of our investments theme in the energy space, as we believe that this model also provides a compelling case for renewable energy adoption in markets where wheeling is available. So I do have Noah on this slide, which is part of that investment theme. But before I get to what they do, I just wanted to spend a few minutes just to provide some context of wheeling and how this business model is also contributing to scale as well as adoption of renewable energy in South Africa. So essentially, access to the grid in South Africa has resulted in a nascent and fast evolving aggregation or trading markets. In essence, what an aggregator does is aggregate various energy sources, could be wind, solar on the back end, and also aggregate various customers on the front end. These customers can vary by size, demands, need, etc. What the trader would do sitting in between the two layers would be to efficiently allocate the power to the clients on the front end. So aggregation, in a sense, to drive adoption of renewable energy by providing flexibility as well as an array of contracting options, which allows customers to sign PPAs in a quicker manner than compared to the traditional model. I'll just give some example to illustrate that. Some of the customers in the markets are really reluctant to contract on 20 plus years PPAs. Some of them are just not equipped to take such long-term commitments. So by being part of an aggregator, they are able to contract short-term as low as 3 to 5 years, which allows them to quickly adopt sign PPAs and start consuming renewable energy. Some other example I can give is some of the customers have really unusual consumption patterns and really value being part of an aggregator, as they can get this combination of wind and solar that best match their demand profile. So these are just some examples that show how the aggregators are also playing a key role in this wheeling market in South Africa. I'll just quickly touch to what we've done under the aggregator model as well. So we invested about $90 million toward the end of last year into an aggregator called Noah. A year later, we doubled that commitment to about $180 million after seeing exceptional action since the launch of the platform and the requirements to deliver more energy in a shorter time frame than we initially anticipated. So basically, NOAA does what I described on the previous slides. The company aggregates fleets of renewable energy assets and aggregates clients on the front end. On the slides, I just highlighted two of the most recent transactions we've closed under the NOAA platform. Last year, we signed a 20-year PPA with Netcare to supply 6 of their ESCOM connected facilities. And about a few days ago, we acquired a 240 megawatt solar project called Kauta, which NOAA would also use to supply energy to their customers. But yeah, I hope these 2 to 3 slides have provided you with some context of what we've been doing in the wheeled energy space. I think they're heavily tilted towards South Africa, but I think I'll just hand over to Baba so he can provide some colors on where we see the next growth opportunities coming from.
No, thanks, Iranga. So we are, as Iranga has pointed out, we are seeing one benefit that I didn't mention earlier on through wheeling, where you are able to consolidate both solar and wind generation into one product and offer that product directly to one customer. So I think this is again another evolution that's beginning to come across in South Africa as more and more projects deployed and customer needs are understood, whether that's in terms of length of contracting, people wanting to maintain their flexibility flexibility around their energy sources, or wanting higher reliability of supply from one provider, which is where NOAA is now making significant strides, aggregating sources from renewable energy from both solar and wind, and then providing that as a combined service to multiple off-takers. So look, as mentioned earlier, South Africa seems to be ahead of the game on the continent, but we're now beginning to see a number of countries putting in regulations to sort of follow suit in what South Africa is doing, even though those are at a very early stage in most cases. We at AIIM, we are keeping an eye on how those regulatory amendments evolve into implementation. So I'll just walk through some of the markets we find most interesting and what has happened, and discuss some of the general risk we see over time for them to reach the status of actually implementing and getting players working with these new amendments. So in Nigeria, as an example, we've had recent announcements permitting states to now generate their own power. So this would allow players like ourselves relate directly with states and their resident discos to be able to inject renewable energy power into the grid, and then wheel that power directly to customers within a disco. So when I say disco, I mean distribution company, and wheel that power directly to a disco's an off-taker within a disco's franchise. So we see that as an important step in devolving power to the states to find solutions to their own specific energy needs. In Morocco as well, we've also now seen regulatory amendments that has now opened up the medium and low voltage network, private players. Previously, that network was monopolistically operated by the state-owned utility. That network currently has more than 70% of Morocco's energy demands. So obviously, the opening that to the private market now is a significant opportunity, and the ability for you to again build your solar plants in the areas in the south with the highest resources and wheel that to customers on the medium and low voltage network, we see as a a positive. The regulations have been announced. We're now waiting to see how quickly the government moves into actually putting in the implementation orders for players to start building capacity and willing power to customers. Morocco are particularly motivated to get this done, given their current high dependence on energy imports, based on recent global macro shocks. The government is quite motivated to mitigate that dependency going forward. In Egypt, another very interesting market for us, given the scale of the industrial sector there and the country's increasing focus on increasing its exports. Sorry, excuse me. Wheeling regulations have actually been in place for quite a while in Egypt, but given the government's sort of motivation to maintain the status quo of the industrial and commercial sector, sort of subsidizing the residential hesitations, there have been historic hesitations in actually moving those regulations into implementation. But recent noises coming out are that the government is now ready to move into a pilot phase in Egypt, where they will permit private players to, at least from the start, build plants and wheel power directly to customers, but for only new demand initially. So we see that as a positive step, where new plants will be built for new demands, and then hopefully over time, we hope that the market in Egypt opens up a bit more for players to be able to find their best and cheapest source of power. In Kenya, the net metering regulations, again, which have been in place for a few years, we now expect to be gazetted this year, i.e. put into operations, and players who have built solar plants more specifically, to meet their demand, can now upscale those capacities to be able to sell that power into the grid. And we believe that this would be a front runner to the wheeling regulations to follow on the back of that, given the recent announcements around the Eastern African Power Pool coming into operations. So all in all, I think still at very early stages in other countries, but the right noises are beginning to come out from the markets I just mentioned, who are now trying to follow suit in what we're seeing in South Africa. Challenges still remain around, risk allocation around grid operations, and who takes what responsibility should there be a grid failure, around tariff structuring in those countries, as well as how do you ensure unbiased grid access for all. So all in all, those challenges still need to be overcome, but we believe that these countries I've highlighted are moving in the right direction, which would present significant opportunities for players like ourselves to come in and build capacity and sell that bilaterally to customers directly. So I will stop there. Thank you very much for listening to us, and happy to take any questions, John.
Thank you very much to both of you. And we have one listener, Henry, who apparently knows a little bit more about the Kenya situation, because he explained in the chat section that this is the net metering regulation is supposed to be gazetted today. So this is a very timely point.
Yeah, I hope, Henry is more optimistic than us, so he must know something we don't. So we continue to stay till before the end of the year, but fingers crossed if that happens, then that would be fantastic news.
Very good. Well, thank you so much. I want to jump in right to the questions, and maybe take Damien's questions first. Damien has two questions. In South Africa, with Eskom still owning and controlling the grid, are wheeling contracts then constrained by ESCOM's participation? Can you do a wheeling without ESCOM?
I would give an overview and then I would let Iranga chip in. So the answer to that is yes, and there's the ongoing devolution of ESCOM around transmission and ultimately who, in the case where you want to sell power to the grid, who the ultimate buyer is. But putting that to one side, the answer to that is yes. Where it needs to be negotiated is, what is the risk allocation if the grid was to fail? Who carries that risk of power not getting from you who's generating to the off-taker who's buying? And we've seen that dealt in various ways in some of the contracts that some of the projects that we've signed, and I'll let Iranga speak on that in terms of how that risk has been allocated in South Africa.
Yeah, sorry, just looking at the question again. ESCOM, the access to the grid is there. As I mentioned, we've deployed a lot of projects there. You just have to incur your wheeling fees, and they're really not standing in the way per se. They are highly motivated for more and more energy to come online, really. So we don't see our state utility as being an obstacle.
If we look at to maybe extend on this question, like if we look at other countries in Africa, I mean, we know that there are many cases of relatively poorly functioning grids or not well maintained enough. How do you see this? Is this like a total no-go then if this is the situation in a country, or are there certain ways to go around this nevertheless and be able to engage into some wheeling contracts?
No, thanks, John. I think like any other industry, you have to. It's no secret that there are grid issues across the continent. But to get this started, players like ourselves have to continue to find franchises or areas where the grid is functional enough for you to get this started. Our portfolio companies have done that well. Iranga has given cases of what NOAA is doing. Our other portfolio company, Solar Africa, is doing exactly the same. But we have had to also invest into, upsizing the substation to be able to connect, right? So you have to find where initially works. There will be places that take a lot more time for the grid to be upgraded. We've seen that in another example in Morocco, where they're trying to build a 3 gigawatt transmission line for players to be able to build more renewable generation. So the quick wins for you to find the quick wins, and we are already doing that in South Africa, is for you to find these points where you can connect it. And in certain cases, you don't have to upgrade the grid. In certain cases, you have to, and that's what we've been doing to get the wheeling projects going.
I suppose you wouldn't take a huge risk to go build a project where for sure you're not going to be able to evacuate. In such markets, unfortunately, we just have to focus on on-site generation at the moment until it's clear that if you build a huge project far away, you are able to evacuate through the grid.
And Justin is asking another question related to this, like, does AIIM exclusively invest in generation, or are you also investing in transmission and distribution to actually allow for that wheeling contract to actually happen?
Yeah.
An infrastructure investor, so investing in transmission falls squarely into our investment theme, in short.
Yeah. And in the case where the regulations permit ownership of transmission or distribution infrastructure, if the returns make sense, we're happy to own that long term. But if it doesn't, then we would have to find a way to factor a return on that investment into the grid into the final offtake price that we're offering to whoever is offtaking the power.
We've got a question from Hazel. So in your presentation, you started with South Africa because this is where most of the wheeling is got started and is happening. And Hazel is asking, do you see more such wheeling agreements in other South African pool countries? Is this something coming up there as well, or is South Africa really remaining like an exception in that region?
In the SAP, we are seeing wheeling opportunities mostly on the cross-border transmission investment opportunities, more so than within countries. So we are looking at a few of those opportunities at the moment. But you have some countries which have excess, some countries which have deficits. You need to be able to invest in cross-border transmission to be able to unlock those bottlenecks. So that's what we're seeing the mostly commercially viable wheeling opportunities.
Something about a little bit of talking about money and financing. First question, I believe this is also a question from Damien. Maybe very quickly, if you can explain like the basic components of a wheeling agreement tariff. How is it structured? What are the different components of this? And then second question to build on this from Andrew. If you are an IPP, is it easier to develop a traditional on-site behind the meter project and get it financed, or is it actually easier to do like a full-blown wheeling project with maybe different off-takers?
We start with the easier one. The answer to that is yes. It's easier to build a captive plant where you are simply negotiating with one off-taker. You don't have to deal with regulators. You don't have to deal with wheeling arrangements, token fees, and so on and so forth. So the answer to that is yes. It's much easier, but as we discussed, if we are to scale up renewables as quickly and as fast as the continent needs, we need to move away from that into the wheeling infrastructure that we mentioned. Then coming back to the first question on the various components, again, I will start off and then Iranga can chip in from what we've seen. And I think we've already touched on them. So in certain cases, you would have a on the investment into the grid infrastructure that you built, right? That will come in. Then there's also call it a wheeling fee that you pay to the owner of the network. That also comes into play for you to be able to use that asset. You're using capacity on the line, which could potentially be used for something, and that needs to be accounted for. And then obviously on the generation side, the generating fee that you charge for building the asset and operating it for 20 years. I think those are the three major buckets. Iranga, am I missing any others?
No, that's it. And you pay, well, in South Africa, there are some admin fees also that you pay to ESCOM for the management of the grid, but you cover that, yeah.
Thank you very much. And maybe we have time for 2 or 3 last questions.
I see one here from TG.
Yeah.
Sorry, I just lost the question. Someone typed the question and it scrolled past. So I'm trying to
chat section probably.
Yeah. So it says for Nigeria, how far are the regional discourse moving with the new legislation? This is the most important part of the process. So look, I agree with you. It's the most important. It's in Nigeria, the discussions are a lot more complex. In South Africa, you have some sort of load shedding. I'll just give you an example here. You have some sort of load shedding schedule. Everybody knows when power is going to go off and on. In Nigeria, you don't have that luxury. So how does someone like myself who wants to willpower guarantee or share that risk with someone else or who I'm selling the power to, but we have no idea how many hours the grid is going to be down for. So look, I think I'm saying that to say there's a long road for, yes, the legislations are in place, but the actual practical mechanics for implementing and actually agreeing willing contracts between someone who is willing to build and someone who is willing to buy are still at the very early stages. Startside is spending, another portfolio company is spending a lot of time working through various business models with a couple of discos in Nigeria to see how they can make this work. The other key issue in Nigeria is how do you ensure you get paid? We want to get paid if I'm building a plant and trying to will. The disco also wants to get paid or keep as much money as possible because of the general shortfalls in liquidity in the market. So to summary to it is it's going to take a while, and we're looking hopefully to be one of the first pilot players to build willing capacity and actually implement. And the agreed business model will then become sort of a template people can improve on or change over time.
I see a question here from Janet. I think she's asking what is meant by behind the meter for Starsight. Baba, I don't know if you want to take that.
Yeah. So behind the meter is effectively your captive installation, where you are supplying your solar generation behind the utilities meter. So, i.e., the utilities meter shouldn't see any electrons from what you generate. So you are completely behind the meter. The power you generate goes directly to the customer and never interacts or shouldn't interact with the utility meter for the customer, except you have some sort of net metering arrangement where you know if there's excess generation, that generation gets sent to the grid, and in certain cases you can then draw that same amount of electrons back at a later time. But yeah, sticking to the initial question, behind the meter is when you generate behind the utility and the customer consumes it directly.
And then maybe as a last question to both of you, in your presentation you briefly touched on the fact that some developers are making a wheeling agreement with one off-taker. Sometimes they are looking at bundling several. You also mentioned that some people are moving into a 20 years PPA. Some others are not capable of committing to such a long time. I would like to maybe have your opinion on those two aspects. Do you already feel that one option is better than the other? Especially because there's probably several developers listening in today, and they're probably thinking of how to structure their projects to make them the most attractive possible when they will be knocking at your door and trying to negotiate working together.
Yeah, I don't think one is better than the other per se, and as AIIM, we're still investing in both. But I think when you start bundling customers and shortening PPAs, there's a level of risk that comes with that, because now you start taking this renewal risk on your customers renewing PPAs and so on and so forth. So the risk profile of a generator will start changing as opposed to having this one long-term PPA. But there is a huge value proposition in that as well, and that's why we are also investing in those in that model. So I suppose in short, there's no one is not better than the other per se, but it just depends on your risk appetite at the end of the day.
And yeah, Baba, if you want to add something on this.
No, that's Iran guy said it correctly. It's all dependent on your risk appetite. We are infrastructure investors. Ideally, we want stable cash flows, predictable cash flows over 20 years when we deploy. That's That's our preference, being limited risk takers. Ideally, that's what we want, but we also understand the upside of maintaining some flexibility as we go forward, whether that's through, this customer is having issues, I'm able to sell that part to somebody else at a higher tariff, and so on and so forth. So as Iranga says, it's really dependent on your risk appetite. We would always piggyback to what we know and what we prefer, being infrastructure investors and having certainty over our returns when we invest. But we're also, keeping an eye out on the upside. It's coming through this ability to maintain flexibility and sell to multiple customers over the years in the market like South Africa.
Yeah, and I suppose this only works that way if you have a huge market, large demands, and ease of reallocation of power. If one of your customer falls away, you can quickly reallocate to a next customer. If you are not able to do that, then the risk profile then just becomes much higher.
Yeah. No, that's a very important point. There are certain markets where absolutely we would want 2020 PPAs. I would not be living with that risk.
Yeah.
So yeah, it's very market dependent as well. Yeah.
Thank you very much. I'm reaching that point in the webinars where I hate to say it, but we are way over time, even though we have many more questions that we did not manage to address. What I'll do is, as I promised, I will share all these questions with both of you after this session so that you can follow up with the people who submitted them. I would like to thank you, first of all, for spending the time with us and sharing a little bit about your experience on this important and promising topic for more solar and wind also in Africa. And of course, also thank everybody who took the time to connect with us to learn a bit more about wheeling today. Thanks to you. So a big thank you to everybody. Before I let you go, I want to quickly tell you about two of our future events. In the coming weeks, we have our big online conference on energy storage. That's always a massive success. It's going to be organized on June 4, 5, and 6. So if you want to learn really about the basics of storage, there will be a special program for this. But if you want to learn about the more advanced technical stuff or about the latest developments in projects, please make sure to register and to tune in. We even got sessions in French for the French speakers who want to learn more about storage. And then our next big event for the year will be REFA, the Renewable Energy Forum Africa. That's our big annual investment forum. Last year it took place in Kenya, and this week, please mark your agenda as we will be going to Tunisia, and it will be taking place in November 2024. More info to come very, very soon. So with this is it for today. A big thank you once again to Anya Baba and Iranga. And I wish you an excellent rest of the day, and I hope to see you again very, very soon. Thank you.